Supermicro, an important player in the AI server market, recently reported earnings, and it's crazy that the stock crashed over 20% after the announcements. Now, from its peak in March, the stock has plummeted over 80%, and some investors might be concerned that this is also bad news for Nvidia stock. But before you hit that panic button on your Nvidia shares, stick around as I break down what's really happening and what it means for AI investors. Speaking of crashes, to avoid crashing your chances to stay updated on semiconductor news, make sure to hit the thumbs up and subscribe button below. Check out my special offer at fool.com/Jose and my coupon for my earnings ebook. Now, let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so before we get into the Supermicro news, Nvidia stock is up 4%. Congratulations to all us Nvidia investors. This is insane. Obviously, the stock is up after the election results here in the United States. So who knows where this market will go in the short term of things. In the long term, I am very, very bullish for Nvidia, and you guys kind of know my short term results. But at the moment, enjoy these gains, and I hope everybody is doing really, really well. So let's continue with Supermicro. Now, first, let's try to understand what Supermicro does. And they're essentially the company building these specialized servers and infrastructures that power AI applications, particularly using NVIDIA GPUs, but they've also had the solutions for AMD and Intel. Think of them as a company building the housing for NVIDIA's brain chips or kind of AI chips, right? Their solutions include everything from basic servers to advanced liquid-cooled systems designed specifically for AI workloads. And right now, as we all know, there is a huge demand and discussion for AI servers, but not only that, for liquid-cooled servers as well, which is something that Supermicro really focuses on. Now, let's kind of understand why the stock is kind of free falling and why the stock is down. And there are 4 major red flags causing investors concern. And the timeline pretty much all started with the short report on the stock a few months ago. But the first thing is auditor drama, right? Ernst & Young, their auditor, recently resigned. And this is actually their second auditor to leave in under 2 years. This is obviously pretty important news because the short report has kind of discussed potential fraud in revenue recognition or just financial in general. Seeing auditors leave kind of says, hey, look, maybe there is some truth to this. Now, during the earnings call, the CEO of Supermicro did state that they are actively in process of engaging a new auditor. And this, like I mentioned, has created serious concerns about their financial reporting. The timing is particularly concerning as it comes during a period of explosive growth for the company. On the bright side, though, they did mention that their independent committee has not found any major issues, but we should have a report either this week or next week on this committee's report. But again, this is kind of their internal people saying, hey, look, yeah, we did nothing wrong. And normally that's what you would expect them to say, right? We're going to have to kind of see where this goes in the future. The second major red flag is because of this, there is the listing risk. They haven't filed audited financials since May and face a potential NASDAQ delisting if they don't report the results by mid-November, which is just a few weeks from now. The CFO has mentioned that they can't provide a timeline of when things are going to be working, but they're working diligently to resolve the situation. This uncertainty has kind of led some analysis, which is pretty crazy, to suspend coverage of the stock entirely. For example, Mizuho has completely ended their coverage on Supermicro because what's the point if the financials aren't even audited at the moment? Now, the third red flag was revenue miss. The preliminary Q1 revenue came in at $5.9 to $6 billion. Because they are not audited, they can only give us preliminary results, and this is below their previous guidance of about $6 to $7 billion. Their Q2 guidance also did disappoint, projecting somewhere between $5.5 to $6.1 billion versus analyst expectations of about $6.9 billion or 6.86. So we can see not only are we seeing kind of this these negative pressure from their auditor and delisting risk, but we're also seeing the company kind of missing expectations. The company's gross margin also remains under pressure, with quarter T guidance suggesting a 100 basis point sequential decline. And this is one of the scary things about the AI server space is it's very, very competitive. The fourth kind of red flag that many investors might be concerned is working capital concerns. The company's inventory level hit $5 billion. And while management insists this is necessary for growth, it does raise questions about cash flow management. As one analyst pointed out during the earnings call, that this high level inventory could become problematic if demand slows down in the AI server. Now, that to me is not much of a fear, in my opinion, because we've seen how strong the demand for AI server is. So for me, that capital concern of a market slowdown is not necessarily bad, but I've always mentioned that I don't like this business model, as you need to use intense cash flow to help grow revenue. The more money you spend in cash flow, the more inventory you can buy, the more inventory you can sell. Now, before we go any further, I do have a questions for you. So in the comments, let me know, would you still invest in a company facing potential delisting, even if their underlying business appears super strong? And that's what we're seeing here, right? Now, for the part that NVIDIA investors care about, what does this mean for AI demand? Surprisingly, there was a nice amount of positive news here. First, just strong AI growth. Despite the accounting issues, Supermicro's revenue grew 181% year over year, primarily driven by AI server demand. The CEO confirmed that AI contributed over 70% of revenue across enterprise and cloud server providers. This continues to demonstrate that incredible strength and demand for AI infrastructure build-out. The second thing is they did discuss their relationships with Nvidia. One of the concerns was Nvidia going to slow down maybe selling some units to Supermicro because of these issues? But the company addressed concerns about their Nvidia relationship, and they mentioned that they've spoken to Nvidia and they confirmed that there's been no changes to allocations, and they maintain a strong relationship with them. Now, the next great thing for NVIDIA investors is the Blackwell anticipation. Supermicro confirmed that they're ready for NVIDIA's next generation Blackwell GPU launch, and they are already in production ready for the GB200 NVL72 in both, and also the 10U air-cooled and 4U liquid-cooled B200 rack plug-and-play system are in full production ready. So the company sees this next generation product cycle as a significant growth driver, which is obviously very, very bullish for NVIDIA. Now, the next kind of growth opportunity or great news for NVIDIA is liquid cooling's dominance. The company shipped over 2,000 liquid cooled racks in the recent month, showing strong demand for advanced AI infrastructures. And they expect 15 to 30% of new data centers will adopt liquid cooling infrastructure in the next 12 months. This is particularly important as AI workloads require increasingly sophisticated cooling solutions like NVIDIA's Blackwell, which is going to dominate the market. Now, the fifth thing that NVIDIA investors should know is infrastructure innovation. The company introduced new technologies like their Super Cloud Composer (SCC) software, which manages everything from chip level to data center cooling towers. And they've also deployed what they claim is the world's largest direct liquid-cooled AI supercluster with 100,000 NVIDIA GPUs. So remember, Supermicro and Dell both work together to kind of deploy xAI's supercluster, which is the one I believe they're discussing. So we can see how Supermicro is a big player and is one that can build these huge AI superclusters. Looking ahead, Supermicro seems optimistic about AI infrastructure growth, even as they work through their accounting issues, which is very big. They're expanding manufacturing capacities globally, including a new Malaysia campus, and their current facilities can produce over 1,500 liquid-cooled racks per month. The company is also innovating in data center designs, claiming their solutions can reduce build time from 2 years to just a few quarters. For NVIDIA investors, this earnings report actually provided several positive signals. AI demand remains robust with no signs of slowing down. Customers are eagerly awaiting next-generation Blackwell GPUs. Infrastructure providers are scaling up capacity significant. The shift to liquid cooling indicates increased sophistication of AI deployments, and enterprise AI adoptions appears to be accelerating. The key takeaways: while Supermicro stock is suffering from governance and accounting issues, their underlying business data suggests AI infrastructure demand continues to grow rapidly. Their challenges appear company specific rather than industry wide, which should provide some comfort to Nvidia investors. The waiting game for Blackwell GPUs might create some near term volatility, but the long term AI growth story remains intact. Well, that's it for today's video. Take care and see you for more semiconductor and AI news.